Welcome back to the Ticks and Trades channel. I'm Sam Morton. This channel is where I share levels of support and resistance in the SPY that I identify each morning before the market opens. Then I use those levels to trade against in E-mini futures trades. This channel exists so I can share those levels each day and then show you the trades that were possible and then my own trades if I take any. This approach helps keep me disciplined, and I hope it helps you as well. What you're looking at is a daily chart of the SPY, and we had a down day. That should not have come as a surprise. We talked about that possibility in the game plan, which is right here. These were the levels and the game plan that were put out this morning. So take note of the levels and then read through the commentary here. A few things to point out. Typically, the bearish consolidation that we're in the middle of would play out below Friday's low. So I mentioned that. The thing that is less probable is that the bulls would get above the high of Friday, or basically the all-time highs around 674, break out above that, and then this whole thing would have been a fake out. But so far, the most likely thing to happen is the bears are going to drive price down, eventually get below the low of Friday, and then have some kind of target lower and then have a bigger reset on our hands. So we talked about those two big picture scenarios. Also, we talked about IWM. You might want to go back and look at yesterday's video. They gave a pretty good reversal signal. That was yesterday's candle, so Wednesday's candle. And sure enough, they did pull back today, and a lot of times they tend to lead the SPY. In fact, when the IWM started falling, the SPY wasn't far after. We can actually look at that later. So anyway, there's a few notes on the different levels. You can read through the rest of these notes if you'd like. Just notice the pointers on a few levels, things to consider and look out for as we got into the day for the regular trading session. And here's a screenshot of what the levels looked like plotted on the 1-minute chart before the opening bell. When all was said and done, only 3 levels were hit, and here's how you would have traded them per the rules. And by the way, these rules that I keep referring to, those are outlined in the trading course that I've put together. It's called the E-mini Trading 101. It's on the Ticks&Trades website. There I show you how to identify the levels and how to trade them. So here's 666.82. It was kind of interesting. In the pre-market, price was above this level, and they were coming down into it. So right when the bell rang at 9:30 a.m. Eastern, they were right here above the level, came down, hit it, messed around with it. It's almost like that was a target to open. What we do is give the market 15 minutes to settle in. So 9:45 a.m., the close of that candle was 667.29. So they were above this level. They'd already pulled away, but if you want to play by the rules, you would go long again at 666.82 or 666.87. That's a 5-cent buffer just to try to get in front of front runners. You would have entered a trade in the E-mini futures when price in the SPY came down, hit this level right here at 666.87, going long because they're coming down into it from above. And you're looking for 4 points. That's just it. 40 cents in the SPY. They came up within 10 cents and immediately pulled back to the break-even point, your entry point. And that is a wash. Jump out at your entry point if you can, because under normal market conditions, this could be a clue that the trade was barely given and they're going to go lower after this. They did go lower, and the prudent thing to do was jump out. But as you can see, they did go above eventually. And that would have worked out if you had more patience and gave the levels more wiggle room, which was part of the game plan. We'll just treat this consistently and say that this level was a wash, at least trading on the long side, because of the rules. So I'm just going to make this thing dotted. I'll just leave these reference levels handy for later. So this level traded on the long side is done. They never got under this level long enough to go short for what I call a recycle trade. That would have happened right here, but we're not going to count this. I want to see at least 20 minutes or so. So they're coming down into 663.50. Let's pull this up to 663.55. Here's a low of 663.72. Not close enough to consider this a near miss of triggering the trade. They did bounce up a lot. That's something to consider. Basically had the same thing happen. You're looking for a target of 4 points in the E-minis. That would be somewhere in this neighborhood here. When they did bounce, they came up within just a few pennies, within 10 cents. And immediately they're back at the entry point where you got into the trade, jump out at a wash, and that would be the safe thing to do. In this case, it paid off because they got underneath this thing and you would have been out of the money. That was your clue to jump out. But meanwhile, they're coming back up into this level. Originally, it was 663.50, I think. So now you can pull this down toward price and go short for what I call a recycle trade. That should be 663.45. You get the idea. And they gave a base hit here, 4 points. And I don't know if you want to consider this, wiggle room here. They kind of came down a little bit, but at this point, the market's telling you, or at least this chart and the IWM and a few other things are telling you that the bears are probably in control. You've got some downward momentum. So there's a base hit on the recycle of that level. So this is done on the short side. And now they're down to 658.68. Pull this up to 658.73. And I guess I needed my reference levels here. This will give you a visual on what you want the trade to do. So if you're long at this point in the futures, you want to get 4 points over here. So that's the green line. Now, yes, they did get below this level quite a bit. Not enough to cause any alarm if you just have the patience to withstand it, because this whole area of support, giving this just a few minutes, there's your 4-point base hit. So that's an official base hit trade on this 658.73 level. That is 2 official base hits of 8 points total for the day. No more long trades at this, so when they got back down to it later, I don't trade a level more than once, typically. So here we go, all 3 levels satisfied. So if you just step back and look at these levels and see what price did with them, you may ask yourself, why are we only taking a few points? Well, 4 points in the E-minis, or 40 cents, is just more probable. You could get more. Oftentimes you get bigger bounces and bigger reactions. It's just the most likely that's going to happen at these levels the way they're identified. Just in the big picture, when you step back and look at these levels, which once again were identified and put on the chart before the opening bell, and yet when price got to them later in the day, in this case, starting right after the opening bell, these levels were important. You can see that this level here, original level was 666.82, was important. The way they hung around this level and bounced off of it, even when they got underneath it, they did come back and test it. Same thing with this 663.46, or should be 50. That was the original level. While they did get below this pretty quickly, they came back up several times, just telling you that this level was important. Same thing down here. So big picture, these were zones or big areas that we could identify before the market opened and trade against them during the day. It just makes trading a lot easier if you're willing to follow a process. My trading activity looks like this, or I should say lack of trading activity. I gave the requisite 15 minutes and decided that I didn't like it. I mean, it was a near miss, and I did not enter the trade after I saw this pull up here. So at this point, it's after the 15-minute window. I consider the level done. And as you know, it was a near miss right there. And that would have probably given it within a penny or so if you had given it some wiggle room. But anyway, there was no trade there. And then I let this go for a while and did not take any more trades because by 11:30, I had things to do. I was planning to close up shop anyway. And so by 11:30, they hadn't even made it down to 663.50 yet. They just got under the other level. So that's when I stopped the recording, closed up shop, and didn't come back to the computer until later. Over on the tracking logs, the first one is the playing by the rules. You can see the 8 points on these 2 levels. One was the recycle. The other one here at level 2 was the more straightforward reaction at that level. So 8 points playing by the rules. And then Sam's trades, no trades taken. You can see where this puts both of these logs since the beginning of the year. Everything you see here is just for 2025. So back on the daily chart, let's talk about this down day that we had. I'm just wondering, mentioned this in yesterday's video, if the IWM, which is right here, did not give us a clue perhaps of what was going to happen in the SPY, because they tend to lead. So let me show you what happened. So here's the down day after the doji candle in the IWM. So if we go to like maybe, what is this, let's go to a 5-minute chart here. And so here's today's activity. Wednesday, now here's the first part of Thursday, and it went down all day long. So here's 9:30, the market opens. They immediately start following here on this 5-minute chart. They're getting below some moving averages. By 10:30, 10:40 or so, the first hour, they're definitely looking pretty weak. They get below the 200 period moving average. You can see what's going on here. Pretty weak all day long. So the SPY, if we could look at the same 5-minute chart, they opened up here and started to go higher. So meanwhile, while the SPY is kind of topping out, the IWM had already been falling for 30 minutes or so. So they did lead the SPY in that sense. And both markets were down. It's just percentage-wise, the IWM was down quite a bit more, over 2% it looks like. So where to from here in the SPY and the E-minis? I would just rather take it one day at a time and let the game plans speak for what I think is going to happen, because it's kind of a big picture here. They're constrained by this big candle, and they're going to go lower if they get below the low, and they're probably going to go higher if they get above the high, and start closing daily candles on either side of that. That's the big picture. But in terms of smaller interim levels to trade against during the day, well, those will be identified in the morning. So this is a bearish consolidation until it's not. Yes, we're in a bull market, but this is classic indecision. And if this does roll over, we're going to start seeing daily closes below the low of this, and eventually weekly closes. That is a possibility. And the only way that's not going to happen is if price in the SPY gets above the highs and breaks into new highs. I mean, that's kind of stating the obvious, but this is just a clue that lower prices are more likely, call it maybe a 60, 70% chance, than higher prices, until or unless we see something that would negate this bearish consolidation. So that's my 2 cents. So thanks for watching. I hope this was helpful. If you thought this video was helpful and liked it, then give it a thumbs up. Thanks. I'll talk to you again soon. Have a great rest of your day.